Well, time to move on then. And Aeroflex Industries, that's a 350 crore IPO. It opens up for subscription. Out of the 351 crores, 151 crores will be fresh issue, and the remainder will be by the OFS route. The company has already raised close to around 104 crore from its anchor investors. To help us out to understand the company better and what's their vision from here on, Asad Daud, the MD at Aeroflex Industries, joins us on the show. Hi, Asad. Thanks so much for coming across to our studio. And it must be a big moment, right? You'll have bought this company, turned it around, and prospects could be looking up. Now, a couple of questions out here.
Sure.
I'm looking at the way you've priced your IPO. It's a little over 100 rupees odd.
Yep.
But just a few months ago, you'll had placed some shares with some of the big names in the market.
Correct.
Mr. Ashish Kacholia, you have Mr. Jagdish Master as well, at around 85, 87 rupees odd. What has changed so much that suddenly you're coming out with an IPO at more than 25% premium in comparison to that placement?
So actually, with a lot of these investors, we started the conversation from the end of January and the start of February. And those discussions happened on the numbers of December. And if you see that from December to the March numbers, and now obviously because the parent company of Aeroflex, SAT Industries, is already listed on the stock exchange, and we have already announced the results for that for Q1. If you see the PE multiple that we gave to these investors and the PE multiple that we are currently offering, so it's actually it's at a lesser PE multiple if you see from that aspect. So we have taken all of that into consideration to ultimately price the IPO.
So your rationale basically is that the numbers improved. That's why you're asking for a higher price, but you believe that the PE is less than what it was.
The PE is lesser, yeah. The PE is lesser, but obviously because the numbers have improved, so the price.
Okay, I've got that. Asad, tell us a little bit about the company itself. I mean, viewers would want to know. I mean, just the basics. What do you do? Do you have a moat? Do you have a competitive advantage? Start there.
Yeah. So first of all, we are into manufacturing of metallic flexible flow solutions. So these solutions are used for the smooth flow and transfer of any kinds of liquids, gases and solids. So it could be oxygen,
so
nitrogen,
you make
hydrogen.
metal tubes, very simply, metal tubes, very simplistically.
Metal tubes, but which is flexible. So because generally metal tubes are mostly rigid, but what we manufacture is flexible tubes.
Okay.
So that is a moat, and we supply to all the the critical industries like oil and gas and petrochemicals, and the new age industries like fire sprinklers, solar, and EV, and all of these industries.
How is the company placed in the marketplace? I mean, do you have, who's your nearest competitor? What's the size of the market first of all, and what's your share, and who are the other competitors? So
if you see the global market, because 80% of our sales is from exports, so if you see the global market would be about $3 billion, and if you see our turnover of exports, so we would be catering approximately 1% of the entire market. Now, currently in terms of competition, there is no listed company in India right now who's into the similar line of business as ours. So we'll be creating a new category on the stock exchanges.
Okay, all right. Asad, for the last year, your revenues were what, around 270 crores
yes,
approximately?
Right, yeah.
Your PBT was roughly around 40, 41 crores or thereabouts. Right. But your operating cash flows is only around 3-4 crores odd.
Yeah.
So, explain that to us. And are you expecting this operating cash flows, which is a key dynamic from a market perspective, to improve from here on? We're not asking for specific numbers. On listing, we will want that. But for the time being, if you could tell us, are things going to improve from here on?
So first of all, the reason for the cash flow from operations being low, because if you see the last year, there was an increase in inventory. There was also an increase in receivables. This was on account of the supply chain issues that we faced because of this Russia-Ukraine war. And that led to slightly higher inventory cycle and slightly higher debtor cycle. But we have already started working on it, and the results you would see very soon about the improvements that we have done, both from our procurement to also from our sales strategy.
Okay, Asad, hi, good morning. So just have a couple of questions on that front. Do you expect your operating cash flows to improve over the next 12 to 18 months? If yes, what would it be like? And there is a little bit of pressure on your balance sheet in the sense your working capital cycles are also much longer. There's pressure that you're seeing in terms of receivables as well. Can you give us some more internals on how all of this would shape up?
So in terms of the working capital cycle, so since we are an exporter and more than 80% of our sales is from exports, and also about 40% of our raw material we are currently importing. So we need to keep sufficient inventory to ensure a smooth flow of our production, and plus we take about 4 to 6 weeks for the production at our manufacturing plant, because we manufacture our products from a quarter inch to 14 inches, and we have more than 82 lines of machines. Hence the reason for the high inventory, and we have already started working on the debtors cycle. The reason for the last year increase was, like I mentioned about the issue between the Russia and Ukraine, which led to slightly disruptions in the supply chain for the first 3-4 months of last year. But we are starting to see that ease out in the current financial year.
So you said you're working on your debtor cycles. Can you tell us the trade receivables? Currently, what is it at, and how much do you think you can, bring it down by over the next, say, 12 to 18 months?
So approximately the receivables currently stand at about 75 days on an average. So our aim is over the next few years to go to at least for the first stage to go to 60 days, and then obviously much better in the future as well.
Okay.
Asad, sorry, just a quick point. Both from raw material sort of assuredness, right? So steel is the biggest raw material?
Stainless steel, yeah.
Stainless steel. So do you have, where do you procure it from? Do you have sort of tie-ups? And on the front end, when you sell, do you have are these longer term contracts? Because when you get a price shock, are you able to pass it on immediately with a lag? How does it work?
So first of all, talking about the raw material side, so there are two kinds of raw material that we buy. One is the wire and one is the coil. So in terms of wire, 100% we are buying from India. In terms of the coil, we are importing about 70% currently, but we are looking at creating an alternate of a supplier in India who can supply us the coil. That is with regards to our raw material. Now, with regards to our customers, so with a few of our customers, we have long-term contracts. So they give us the planning for the entire year, and then they break it down into monthly and quarterly POs, and then we have to dispatch the material as per that. In terms of the pricing, so in case there is minor changes in prices, about 2 to 3% that we bear, but in case the price changes are more than 4 to 5%, it is there in the agreement that the price increase will be actually passed on to the customer. Now, just to add to that one more point, that pre-COVID, the prices of stainless steel were more or less constant. It is just that in the last 2 years of the disruptions that had happened, there was volatility in the prices. But now in the past 7-8 months, again the price have stabilized. So.
Okay, got it. And now you said that some part of your, I think your coils, you're importing, right?
Yeah.
So out of that, how much comes in from China?
The most of the import is from China as well. Yeah.
Okay, so I just wanted to ask you on that front, Rene, since China is going through a slowdown, may not be very good for some of these stainless steel manufacturers. But for you, since it's your input cost on the margin, could it be a benefit for you since China is slowing down? They're not consuming most of what they are producing, which is a fear for the globe. But if you are buying from them, then it will be on the contrary a positive for your margins, or is it just a pass through?
No, so in terms of the margin, so actually we are looking to slightly debottleneck from China. The reason being that, like I said, 70% of the coil is from China, but we are looking at Indian manufacturers to buy from them. Because of the geopolitical issues with China, so we want to de-risk ourselves from that aspect as well.
Okay, all right. Final question before we let you go. With the current investment that you have, what is with the current gross block? What is the peak sales that you can do? We're not asking you for a guidance here again, but what is the peak sales? Last year you did 270 crores.
Correct.
At peak, what can you achieve?
So generally our fixed asset turnover ratio is about 4.5 to 5. So with the capex that we are doing through our internal accruals, if you extrapolate that, you'll get a fair idea about where we can go over the next 4 to 5 years.
Give us a number.
We have been growing the last 3 years at 35% CAGR. So if you do the same math, we are expecting at least a 3 to 4-fold jump in our numbers over the next 4 years.
Okay, so around maybe 4 digits, right?
1,000 crores.
By 3-4 years. All right. Asad, lovely speaking with you. Thank you very much for joining us.
Thank
here
you so
in
much.
the studios.
Wishing you all the best, and on the IPO listing, we look forward to chatting with you again.
Thank you so much.
Thanks very much. Well, it's 9:10, which means we can